After an eventful week ending Friday, investors may eye stock-specific news flow and global trends to tread the holiday-truncated week. Last week, the frontline S&P BSE Sensex and the Nifty 50 indices advanced 2% each on a weekly basis, courtesy a splendid rally staged by large-cap stocks on Friday. Marquee names like ITC, HDFC Twins, Infosys, Tata Steel, TCS, RIL, HCL and Bharti Airtel zoomed up to 3%, tossing the frontline indices to all-time highs. The BSE barometer of 30 shares went past the 55,400 mark for the first time and hit a new milestone of 55,488 in the intraday trade, while the broader 50 share index on the NSE surpassed the 16,500 mark and rallied ahead to hit an all-time high of 16,554. For now, the indices are parked at 55,437 and 16,529 levels. On the flip side, broader markets swayed away from their record high levels as investors continued to book profits. The BSE mid-cap and small-cap indices closed 1% and 1.6% lower respectively for the week. Going ahead, as June quarter earnings have largely wrapped up, only a handful of small-cap companies are slated to report their numbers this week. Besides, markets will also react to Q1 results declared on Friday, post-market hours, and on Saturday during the early hours on Monday. It will also await wholesale price inflation data due to be released later today. Moreover, we will also see Devyani International, Windlas Biotech, Krsnaa Diagnostics, and Exxaro Tiles debuting on the exchanges this week. Market participants are keenly awaiting their listing as a relatively muted response to the IPOs of Aptus Value Housing Finance, Chemplast Sanmar, CarTrade Tech, and Nuvoco Vistas last week raised concerns if the retail frenzy in the market was losing its steam. Consider this, the 4 IPOs launched last week managed to garner only 3.74 million retail applications, which is about a third of 10 million retail applications received a week before. Let's go to Gaurav Garg, who is head of research at Capital Via Global Research, Dr. V.K. Vijaykumar, who is chief investment strategist at Geojit Financial Services, and Arun Kejriwal, founder of Chris Investments, to understand if these numbers signal a shift in the scenario.
So if we compare all the 31 IPOs which have come so far from December 2020, retail participation has been very high. So in 30 out of 31 IPOs, retail people have subscribed for more than 2 times of their reserve portion. In fact, in many of the IPOs, they have subscribed for more than 10 times, which shows that retail people want to actually grab at least one lot in the IPO, and hence they are going after every IPO. Probably by not looking at the fundamentals or long-term outlook of the company, they are investing in the IPOs just to make sure that they get handsome listing gains. I think this phenomena definitely is a cause of concern, because what happens is that when such kind of thing happen, there are a lot of companies which see an opportunity, and whether they have very strong fundamentals or growth outlook or not, they find the time to be apt for them to actually launch IPOs. And if their IPOs are subscribed fully, retail investors would definitely get something out of it, and it may or may not result into good gains on listing, as well as it might turn out to be a very poor bet in the long run as well.
There were 4 primary market issues which opened in the week 9th to 13th of August, and all these 4 issues were of a much bigger size, between 3,000 and 5,000 crores. Further, each of these issues had their own sets of issues. For example, Nuvoco Vista was an issue of 5,000 crores, and it had made losses on account of integration, the merger of various group companies that were acquired, like, for example, Lafarge, and of course the Imami acquisition which was done, and they reported losses in 2 of the last 3 years. If you look at Sanmar, Chemplast Sanmar, in this case the company had acquired a subsidiary and made it into a wholly owned company, as a result of which the company had negative net worth. Compare this with the earlier lot of 4 IPOs, which consisted of Devyani International, Exxaro Tiles, Krsnaa Diagnostics, and Windlas Biotech. Here, the size of issues were much smaller, with just Devyani being about 1800 odd crores. The remaining 3 were substantially lower, and the total amount to be raised was about 4600 crores. Here, you had much larger applications that were received in the IPOs than the present lot. If one tries to understand, was there any shift in the understanding of the retail investor? Not quite sure whether that is reality or it is just a fatigue factor, because the pressure of IPOs has been very, very high, and you had issues opening every single week. And the irony of it was that in the previous week you had 4 IPOs opening on a Wednesday, closing on a Friday, certainly bringing in fatigue factor and also reducing the availability of funds for investors to apply, irrespective of whether they were HNIs or they were retail investors. Investors have been applying for IPOs only on the basis of getting lucky, allotted shares, and they are able to encash with substantial premiums on day one. Going forward, while this particular lot of IPOs has seen substantially muted response, whether this would be the norm or not would be determined once the 4 issues list on Monday from the previous week, and these 4 issues list in the following week. Post the performance of these 8 IPOs, 4 plus 4, and the performance of these newly listed IPOs in the June quarter results, will we know how these companies have actually fared. The separation of the chaff from the wheat would only then happen. I believe it's still early days, and we need some setbacks to this new breed of retail investors, which from that typical 25-26 lakh applications per IPO has now crossed the 32 lakh mark, and we do see between 35 and 36 lakh applications also hit in a particular issue.
Whenever the secondary market, the stock markets are very buoyant, like what they are now, and when there is exuberance in the secondary markets, well, the retail investors will even borrow money and apply for IPOs. IPOs is fine. Retail investors participating in IPOs is good, but the retail investors should distinguish between good IPOs and IPOs which need not prove to be good in the long run. A study by Prime Database which says that 89% of the IPOs which came some, how many years, 2006? So that means must be some 15 years now. The returns has been very poor, 89%. Only 11% has delivered reasonable returns. Also, a very important point is retail investors should distinguish between IPOs and OFSs, offer for sale. But newbie investors who are applying for this are likely to come to grief maybe 1 year, 2 year, 3 years from now. Therefore, they have to be extremely careful while applying for IPOs.
Clearly, while fatigue in the primary markets may be playing out, it is too early to say if the trend will continue. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.